Will it worse? Well, you can see over here from the SEC, they've already published their thumbnail. Look, they're in the thumbnail game just like us, and it says we are operating as an effing unlicensed securities exchange in the USA, bro. And that comes from Binance chief compliance officer all the way back in 2018, and that is actually from the SEC's official Twitter page over here. So you can see there's the SEC. Today we charge Binance Holdings Limited, Binance US based affiliate, BAM Trading Services, which together with Binance operates Binance US, and their founder 𝗍𝗍 with a variety of securities law violations. So the cat is out the bag. We knew this was coming because of the DOJ report which came out about a month ago. And how is this going to affect markets? Well, you can see over here, if you do look at the Banter Bubbles chart, well, most of course of the coins are going to be red on the day, but is there going to be a bounce first and then continuation down, or is it just down only? That's what we're going to address in today's show. Is it going to get worse? How bad could this get? So let's get started with the show without further ado. And I just wanted to go through a couple of the tweets. This is from 𝗕𝗆𝗃. 𝗕𝗆𝗃 runs Crypto Quant, and basically they look at on-chain metrics and what's happening with the flow of funds. And he says over here, the SEC sues Binance, but no major withdrawals from Binance have occurred. User balances are actually increasing, which is funny enough. For those of you wondering why I blocked Binance, I blocked Binance because I was getting a lot of spam from them. So just wanted to clarify that, because I often see in the comments people are wondering, did Binance block me? No, I blocked them. Cool. Moving on over here, Will Clemente also identified it over here. He says that have yet to see any material outflows of Bitcoin from Binance following the news earlier today. Only 10,000 Bitcoin, which is only about 1.5% decline in their balance according to Glassnode. So basically, the market seems to be taking this as a nothing burger, which is pretty interesting. The SEC have also claimed that Solana, Cardano, Matic, Filecoin, Atom, Sand, those are all securities. So they have a massive court document over here. I wouldn't be surprised if on today's show Run goes into depth with regards to that whole document, because it's like 180 pages. I haven't had the time to do that, but I'm sure that the researchers will later today. So make sure you watch Rand's show later if you want to see exactly what happened within this document. And then you have over here from Watcher Guru, just in Binance says though that they are prepared to fight the SEC to the full extent of the law. So the Binance are definitely going to be taking on the SEC, and we know that the Ripple case as well, they're also taking on the SEC. So this wouldn't be the first crypto case. Is this Operation Chokepoint 2.0 where they're trying to further their reach around crypto and basically to stifle the innovation and the on-ramps and off-ramps? Well, it is a real possibility. If so, it's pretty interesting how the market is taking it, because for the time being it seems like they're brushing most of it off. And it says over here from the roundtable, Binance reiterates that it is not a US exchange. It says that the SEC are limited in their reach, and therefore maybe it's only going to be the US part of Binance that actually gets affected and not the rest of Binance. So the SEC lawsuit against Binance will only affect the US, which only makes up 2% of its volume, which is about $12 billion versus 250 million. So it's affecting 250 million, not $12 billion. So it's a complete nothing burger. That is at least according to James Bull over here. I don't know yet if I want to say that this is a nothing burger. I think that I'd wait to see how this develops, give it a little bit of time. The market wants to digest everything, and this is what you would expect, right? After these big sell-offs, oftentimes you start to re-establish a new trading range, or same thing with a big pump, you establish a new trading range as the market tries to digest the information and what may have actually happened. I see Woody says it sounds like I'm in my bathroom. Is that what it sounds like, guys? To the rest of you, just let me know with regards to the sound. Maybe I should refresh this.
No, you sound good, bro.
Okay. Josh says that I sound good. Guys, let us know in the comments. We'll have a bit of a delay. Also, make sure that you smash the like button, give the bell notification a tap as well, so you can be notified of any time that we do go live. And let's continue on over here. So if you look here at 𝗕𝗆𝗆𝗏, he says, you guys remember that Binance getting probed by the DOJ? That was only a month ago, and literally no one talks about it anymore. This latest news will be forgotten within 24 to 48 hours. Let me know in the comments, what do you guys think? Do you think this is a nothing burger? Do you think that the market will brush it off? What are you specifically doing? Do you have funds on Binance, and are you going to be buying the dip? Those are the main things that I want to know. You can see the retard market that Rand talks of definitely is already moving on, because they launched a meme token called 𝗕𝗏. You know, CZ, whenever he says 𝗕𝗏, that means that it's basically FUD. That's his response to FUD, because he said he'll receive a lot of that over the coming months, and therefore this token 𝗕𝗏 was launched and already pumped 123%. Like, you just can't help this market. It's absolutely unbelievable, the level of degens within the space. I do not endorse buying something like this, by the way. You can already see it's mostly nuked. It's probably going to be a pump and dump, and who knows, maybe in the future it will go up again, but I definitely won't be buying it. So DJ news over here says, breaking, there was $217.61 million worth of longs on crypto, which have now been liquidated in the past hour. That was last night, as soon as this got launched. So is the flush over? We'll cover that using the high block levels. I'll show you the liquidation levels later on in the show. 𝗕𝗏𝗧 says over here, the market is down on some Binance FUD, but regardless of the catalyst, risk markets are on the edge because of the TGA refill. By the end of summer, the market will move past that and onto the large amount of money printing humming along in the background. I have a few shitcoins to buy in the meantime. Look, I don't know if I recommend buying his shitcoins. I bought X2Y2 and I got absolutely wrecked. That was the one call that I took from him, but I do think that his analysis of the market in general. 𝗕𝗏𝗧 was a massive derivatives trader back in the day, and he is of course the founder of BitMEX, which was the first derivatives trading exchange, and he's a very, very, very intelligent guy. He's been on many of the Banter Fridays in the past, and I tend to agree with him. There will eventually be some sort of QE or stimulus that's going to come into the market, and that when that money printing takes place, you want to be holding hard assets, not necessarily all Bitcoin, but also maybe some property, maybe some gold, and you want to protect your capital in the long run. So also, let's keep an eye out on what's coming up on the calendar. Let's quickly double check it. Is there anything this week? It looks like the main things are already out the way. So we had the US ISM services PMI, which came in at 50.3. So what does that mean, right? Anytime that it's above 50, it's signifying that the market is in expansion, and below 50 is in contraction. So keep that in mind. That came out yesterday. Now, chart wise, what's going on? Well, currently we've come into the important EMAs and MAs, right? So let's quickly turn off the 255, which is the orange one. It's not that relevant right now. Very, very important for the bull markets is that if it is a bull market, even, you want to be holding above that 21 exponential moving average. You can currently see that price came below that, and it's trying to reclaim that. This will be a good test. If the weekly can start to close above that yellow 21 EMA, currently coming in at 25,800, that would be a pretty positive sign and showing that the market is trying to defend that level. Also, you can see over here, you have the 200 EMA, which is the white one. We didn't actually tap it, but we came pretty close. That's coming in at about 25,191. This entire level over here is in fact an order block, which led to the major move up, and oftentimes these order blocks have a high propensity to be re-tagged and refilled. So if you do see price come into that level, this is what I did mention yesterday, as long as it happens on a wick basis and you don't close within this level, but instead you come back up and close up here, then that would be an opportunity to buy the dip, in my personal opinion, and I'd be looking to capitalize on that. On the low time frames, I'm going to give you those exact levels that I'm looking at. The level that stands out with the most high confluence is around that $23,000 level, and I'll show you structurally on the charts exactly why it looks like that, and that should provide a little bit of a bounce, not necessarily a full-on reversal, but at the very least a little bit of a bounce. So one thing that was keeping us cautious within the markets was ages ago, I told you, once you broke down this lucid SAR over here, this serves as now resistance above, and typically this holds you out of the market whenever you see these massive sell-offs. So if you look at the Gaussian channel, the Gaussian channel is still red, and you do also have support coming in at the middle band of the Gaussian channel. Is going to be 24,895. What about Ethereum? Let's look at Ethereum's chart over here. Currently coming into that support as as well, which is between the 12 and the 24 EMA. And then you have over here the middle band at 1744. Middle band's at 1744. Keep a close eye out on that. Once you start to break below this middle band, especially on a closing basis, then you can expect real danger zone. That's when you start to see aggressive acceleration towards the downside. Then you'll be looking all the way down to 1335. And then if you look at Bitcoin over here, the bottom of the band is going to be coming in at 20,483. What I find interesting about this level, by the way, oftentimes similar to the way that CME gaps work, you can also look at the wicks over here. So what I mean by this, if you see the wicks over here, a lot of traders will trade these wicks in the same way that they trade CME gaps. So let's put on the range tool and have a look at how this level comes into play. So quickly grab this over here. And if you put it at the 50% level, that's the 50% level over there. Now we can delete it. Just take that fib off quick. So have a look at this level. This is 50% of that wick. Look at the level of interest. It lines up more or less towards the bottom side of that Gaussian channel. So if you start to lose that, I will start to target all the way down to here, but more specifically on a closing basis. Any closes below that middle band, look down further. Okay, next, ETH BTC. Pretty interesting. ETH BTC continues its up only regardless of market environment. This is according to 𝗕𝗏𝗄. Quite interesting that ETH is competing to become the safe haven asset in crypto and how it now outperformed some on some risk off events. Definitely can't necessarily agree saying that it's now a safe haven asset, but interesting nevertheless that ETH BTC does continue to hold strong. So you can see the chart over here. This is what we identified yesterday. Very quickly to re-explain what I said yesterday. ETH BTC has been stuck within a range over here. You can see the down sloping resistance trend line over there, which we've now started to break out of. So if you want to see this trend continue, the mid-range zone definitely has to hold. Yesterday's candle provide a back test directly into that mid-range, and I'll zoom in further to show you. You can see the bounce off of that zone. So there is definitely relative strength over here in Ethereum over Bitcoin. It is definitely holding up a little bit better, and you see the way that it's pushing up. So something to watch. But with that being said, if you are holding most of your coins, your stables on DEXs, and you're looking to buy the dip, you have to be cognizant and aware that the ETH gas fee price goes up heavily whenever there is market volatility. So he says over here at 200, it's been nice knowing you guys. Basically, he's out and he's not going to be looking to buy, because anytime that ETH dumps, volatility increases, market makers send the gas fees up, and you may struggle to buy the dip. So if you are looking for an exchange, one that I do recommend, who's also running a trading competition, is BitGet. BitGet is a non-KYC'd exchange. You don't have to KYC there, at least for the time being. And check it out. There is currently a competition which running. You can win up to $2,000 if you're number one, $1,000 if you're number two, and $500 in third place.
What do they have? This over here?
Trading volume.
Also, if you trade the highest trading volume, you can win up to $2,000. So if you are a whale and you want to quickly do some quick, easy trades, pretty much it's free money for you over there. The link is in the description below. All right. Yesterday, we also looked at the total market cap. I'm not going to go through the whole rigmarole explanation because that's on yesterday's show, but essentially, it is holding this diagonal trend line over here. We're expecting either trigger to go long on altcoins only if it comes down into the bottom of this trend line. So this one over here. So it's still got percentage-wise, you're looking at another 7% before you might see a bounce. Don't mistake a bounce with reversal. It doesn't mean that the market's going to be up only, but level of interest was a push down into this 8.49% level. This is on others, right? What is others market cap? Others market cap refers to the market cap of the excluding the top 11 coins. So from position number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11, exclude those on CoinMarketCap or CoinGecko, and the rest of them going down the list are the ones that we'd be looking at for potential bounce from this zone. the other option is that if that doesn't come down over here and you see a reclaim back above the 9.58% level, so a big push up and you hold over here, then that would be a break back into the range, a deviation, and then it would open up the opportunity for some sort of a bounce. Okay, so keep an eye out on that. That is something to be cognizant of if you are looking to degen into altcoins. Definitely not recommending that at the moment, but if you are, at least look at that. Okay, buy the dip levels. Okay, these are the main levels that I'm looking at. First, I want to re-emphasize what I said yesterday. Well, we are looking at lows, higher low, and then somewhere around here, maybe it's going to be over here, the next higher low. Then what else did I tell you? I said to you that if you start to see prices break below and close below this trend line over here, the horizontal one that I put in, $26,817. Now you want to start to be very, very cautious. What happened? Yesterday we closed way below, which means you can probably expect continuation further. Now, what you might first see is a little bit of a bounce up. If you see something like this, a little bit of a bounce up, it's more than likely not going to close like that. You're probably going to have continuation back down. And this is the level that I'm watching. 23,523. Well, why that level? A couple of reasons. The first and most obvious reason is obviously the trend line. The trend line matches up with this zone. Then I'm going to show you on the daily chart important moving averages and EMAs that also come into this zone over here. It's just a high confluence trade zone for a potential dip buying scenario. And who knows, that could occur in the next couple of days, maybe even this week. So for those of you who follow me on Twitter, you'll notice that I said I bought Bitcoin at 19,700 and I sold at 28,500. And yesterday I said I re-added into that position at $25,700, which is more or less right where we are now. Now, there is a reason for that. Well, I'll show you on the low time frames. One reason is I was looking for a short-term bounce. If that bounce does not occur soon, I'll obviously manage my risk accordingly and immediately cut that position and look to add that lower down. I'll show you the theory and the thinking behind it when I get to the lower time frame. So it's all about timing. There's a million pieces at work over here. Don't go and ape in and copy me exact for what I'm doing. How much did I enter? Probably about 50% of the position in over there. Now, one of the reasons that I can tell you offhand is I'm willing to take a little bit of a drawdown. So if it is going to come down to that level, that's about an 8% drawdown, because I think there's a very high probability that we bounce from this zone. And I want to get my orders in while I can, right? I'm willing to hold it longer term. This is something that I'd be adding onto my cold storage. So don't read into it too deep. Trade-wise, listen to what I'm saying on the show. Trade-wise, I'm telling you, this is the highest confluence spot. Right over here at about 23,500 is going to be your best buy the dip opportunity. I don't know whether the market is going to front run that idea and start to push price up sooner, leaving the guys who are waiting for this behind. So that's my rationale. That's my reasoning. I hope that does make sense to you guys, and let's continue. Okay, S&P 500 starting to slightly pull back over here. I wouldn't be surprised if you did come all the way back down into the gray box territory at about 42.28. And the reason why I say that is because one of the big stocks which have been moving the S&P 500 is, of course, Apple. Yesterday, Apple had their big Metaverse announcement with their goggles and whatnot, their virtual reality headsets. Let's be precise over here. And that hype might start to die off, and consequently, maybe this is going to start to pull back a little bit. Apple having such a big weighting in the S&P 500 could already start to bring that price down. Okay. We also still focused over here on the DXY, making a decision of if it's going to be continuation up or if it's going to break below this T1 level. I wrote in the daily candle newsletter yesterday a thorough explanation of the thinking behind this. The DXY, which is the basket index for the dollar, right, against a basket of other currencies, would only confirm the proper breakdown if it comes below 103.43. Otherwise, this T1 zone, our previous target one, remains a support level until broken below. Once it's broken below, you can confirm this as a lower high. So lower high after this lower high, next lower high, and then consequently risk on assets might start to catch a bit. Otherwise, as long as it's above this, you expect that this is going to hold the support, and probably slowly but surely you're going to have continuation up. So I will summarize the whole show for you guys who might be confused at the end. I'll give you a full summary of my overall thoughts in one concise sentence, because I know I'm saying a lot here. Okay, dominance. Dominance is still coming down. So there it is, which obviously supports the narrative that ETH BTC is running stronger and obviously continuing in an uptrend. Watch this level over here. I'll put a price label in somewhere around this trend line. If it continues at that trajectory, Bitcoin dominance could potentially reach around this 45.65 level. But it first needs to break below, and let's quickly grab this over here, below this area over here, I would imagine would be a little bit of support, which is where it's currently coming into at this exact moment. So Ichimoku Cloud, in alignment with what I showed you on the 4-day chart using the short, the medium, and the long-term moving average. What is in alignment? Well, I told you yesterday, if you start to see any closes below again, that 26,800, that would obviously be bad, and you might have continuation down and start to go much, much lower. Ethereum is the same thing over here. Ethereum, any closes below that 1862, which is exactly what we got, and you start to operate in risky, uncharted territory whereby price might go much lower. So, okay, Confluence now with the 4-day, giving you those levels of how did I get that zone, this zone over here. I would say that would actually be an even better spot. Okay, one reason, well, if you look over this, let's just move that down a bit. So that is really a high Confluence sweet spot, right? You got the light blue is the 200 EMA. Price almost came into the 200 EMA right over there. Pretty close. Let's see. There should be some reaction off there. Even if you see this candle here come down, there might be a little bit of a bounce. Next one is the main one. That is the 200 daily moving average, which is currently rising. So you can imagine, guys, if this is obviously rising over here, let's draw it up. Give it a bit of a trend line over there, just anticipating more or less that it's going to kind of meet up within this zone. Now, you have the parallel channel, which is coming towards the downside. Let's quickly draw this in. Parallel channel coming in towards the downside. Confluence of the 200, right? The 200 MA, which lines up as well with the diagonal. 1 touch point, 2 touch points, and the 3rd touch point. High confluence zone over there. Expect that there will at the very least be a bounce. And again, I want to be clear. I'm not necessarily saying that you buy this dip over here and it's going to go straight up to all-time highs. All that I'm saying is that if price comes into this zone over here, there will be a lot of buying demand and it will provide for a bit of a bounce. Whether that bounce breaks through this area over here is unknown to me yet. We need to reevaluate, but percentage wise, what would you be looking at? Well, if it went from this level all the way up and it played out like that, I mean, that's already a 14% move. Pretty big and high probability, in my opinion. That's something that I'd be looking to play, because at the end of the day, it still is in spirit of bull flag, and technically you're still holding above that 200-day moving average, which is bullish in the long term. Above the 200 moving average, above the 200 weekly moving average, those are bullish indications. Okay, your pivot level though, we identified yesterday we were below the pivot level in Bitcoin, and I said to you risk remains to the downside, meaning that there's a high probability you're going to continue down. The same is true today. Nothing has changed, right? Your pivot level today is currently coming in at 26,456. Bulls will need to reclaim that zone in order for prices to get higher. Otherwise, risk remains to the downside, and bounces that come back into the zone are probably going to be shorted all the way back down until we hit a real major buy level. What about Ethereum? Well, Ethereum's 200 EMA is coming in at 1723. Let's label this one for you as well. The 200 moving average is currently coming in at 1608. So that's one level of interest. And here's your pivot level. We stuck below it, $1,859 for Ethereum. We stuck below that zone. Okay, next, we're below the key monthly, but we are still holding the range, right? So this is another reason why I was looking to put my first buys in over here. This is the new range level that we're watching. We're hoping to see this area hold as a range. Now, that could still mean that price can come below, right? And then deviate back inside and continue on along its journey back into the range. But this is your first test of the range, right? If you start to hold underneath this range over here and you start to lose the 200, well, that's going to be incredibly bearish and it will start to look like a major deviation. So there's a lot that you need to consider over here. I want to remind you, this area, I know you can't see it that clearly. There's a gray line over here. Excuse me, wait, this gray line over here, gray line and pink line over here. This was the previous range that we had over here. Then what do we have? Deviation. Then we held this. We broke out. If this becomes a massive deviation and you come back into this range, well, obviously that's going to be very frustrating for a lot of investors, and you can expect you probably will revisit all the way back to the bottom of that range. We need to give it time. I'm just trying to open up your mind for the different possibilities. You need to be focused on the potential for something like this to happen. This was always a possibility that this entire move up here was going to be a relief rally, and you might break all the way back down and come into this range. So it's all a game of probabilities. Understand how you're playing the game. Understand where you're taking the trade. Understand where you're wrong and where you would cut your positions if price were to break back into that zone. So I will give you all the levels. I mean, in summary, it's pretty simple. If you start to break below that 200 over here, the 200 MA on the daily time frame, that's kind of always for me bull's final line in the sand. When you start to lose that level, you can expect that this is going to be a massive deviation. You were wrong and you're going a lot lower. So a lot of people have been trying to play the DEX narrative. So decentralized exchange volume as a percentage of all trading volume within the market is now nearing the highs of peak mania, which happened all the way back in 2021, early 2022, which is pretty interesting. And consequently, because of Binance, you can see over here, McKenna says it well, there is a DYDX bid as expected. Derivatives DEXs always perform well when there is a SEX FUD hitting the tape. Easy pair traders to short exchange tokens and then you long DYDX. Do I agree with that is the question. Let's have a look over here. Okay, let's go look at these DEX tokens very quickly. So I have them. Here we go. DYDX. What does the chart say? Well, the chart does not necessarily agree with that narrative. Why is that? Well, firstly, you're range bound. You can see very clearly on DYDX, you're range bound. Big range, deviation over the top, back into the range, coming into the mid-level. But you're losing your 200-day moving average, which typically is something that you want to hold, right? So if you start to see price bounce from here and you can reclaim that level, great. But look at what happened yesterday. If there was any day that this should have run, it should have been yesterday, and there wasn't much, right? You can see that, not much. So don't be surprised if you see this start to roll over and break below the mid-range. Look at GNS as another example. Very strong downtrend. GNS pretty much since it got its Binance listing, it was either Binance or Bybit that led to this massive move over here. It's just literally bled out. We are currently coming into the mid-range over here, but really you need to start to break this long-term trend line towards the downside. Once you can get back above this on GNS, then you can say, okay, maybe it's range-bound heading back towards the top side of the range. Until then, continue to treat it as bearish continuation to the downside. GMX, let's have a look at GMX. Just started to lose this important level over here. Same thing. It's pretty much just been bleeding out in the same way that GNS has. You can imagine the trend line that you'd put on the top over there, just bleeding out, heading all the way down towards the range lows, coming in at $37. So don't be too caught up in narratives or fooled by that. Always look at the chart and see what the chart is telling you. Is the chart in agreement or not? Okay, here we got these super goggles over here. I really wonder what it would be like to swim in these. Imagine the types of fish that you would see. $3,499 is what it's running at per pair. Again, the speculation around narrative-driven markets, you would think Metaverse tokens would have absolutely pumped. I thought, let's have a look over here at the Metaverse tokens. This is the whole list. And look at the 7-day averages over here. Pretty much it's been nuked. 𝗲𝗏𝗿𝗆 hasn't done too bad, 20.4%. If I remember, Hustle mentioned something specific about this. I think he said that there was a lot of speculation that there was going to be some sort of announcement between them and Apple. If that announcement didn't happen, which I'm pretty sure it didn't, you would expect that it would be a buy the rumor, sell the news. So basically, it's probably going to come back down. So guys, don't get too caught up in narratives. Always look at the chart. Make sure that the chart is in agreement. And if you look at this is all the Metaverse tokens. Look at the 7 days over here. Pretty much most of them have just been down only over there. All right. Let's see over here. 𝗕𝗏𝗃 again. He says, also taking this opportunity to start buying some Arbitrum and Optimism, layer 2s, right? ETH gas fees go high. Don't think there will be much going on for the next few months. And 𝗖𝗵𝗃𝗪𝗏 will be the sole legitimate long narrative in his opinion, similar to how withdrawals were in the first quarter. ARB and Optimism are to 𝗖𝗵𝗃𝗪𝗏 what Lido and Rocket Pool were to the withdrawals. Remember the Lido and Rocket Pool narrative around liquid staking? Same thing. He's basically saying that this will catch some sort of narrative. What I just say about the narratives, obviously make sure the chart is in alignment before you start to buy into narratives. Is this one in alignment? Yesterday, we gave Arbitrum and we said that as long as it holds this trend line, it wouldn't be looking too bad. Obviously, nuke straight through that under the Binance news. But ultimately, it is still holding within a range, and you have a technical perfect reaction off of the range low. So what are the range levels? Range low is at $1.06. Mid-range is at $1.40. Range high is at $1.74. Zooming in, you can see over here, nice reaction, beautiful reaction. If you start to see it come back down, it could be an opportunity. If you see it come into towards this wick over here, $1.08, you have an easy setup over here. If you are looking to go long, stop goes below that wick, and you're just looking to trade this as a range play, right? Back towards the mid-range level. So keep that in mind. That is Arbitrum for you over there. I haven't looked at Optimism. I don't think we have time for that today. I'll drop it maybe in the daily candle newsletter today. Okay, now on the 4-hour chart, risk remains to the downside because you do have the bearish cross over here, the death cross, whereby the 50 cross below the 200. Perfect retest into that rejection off that zone. Failed to get above, failed to get above, failed to get above. Deviation into the mid-range. You can see here I have mid-range labeled. Also into the diagonal downtrend. Rejection off that zone. But now you are coming into the range low. So I want to zoom into this level. Also, I want to show you over here that the stochastic RSI is starting to curl back up. So let's quickly zoom out. Here's your 4-hour picture, right? So I have written over here the SR flip question mark. That was the prior range high. So I showed you guys on the other time frame chart. I said to you, remember this was the main range. Here's your main range. We had deviation. Now we have a potential deviation which could be in play over here, but it's yet to be confirmed. For now, this remains support, right? This is the prior range high, which we're now looking for the SR flip, support or at least resistance into now support, expecting that that would hold. That is another reason why I took my first long at that level. You don't know if the first level is going to hold. If it doesn't hold, obviously you cut the position immediately and then you re-add at a lower price. Diagonal downtrend, a lot of shorts which have been building up pressure over here means that liquidations are towards the upside. I'll show you on the heat maps around that 28K zone is where I'll be looking at. So you're looking at this very simply as a potential swing failure pattern. You expect that this range should hold until proven otherwise. Until there's acceptance below the range, that should become the new range. So if you see price come back into here, we almost tagged it, right? SR flip. Let's just say hypothetically, that is an SR flip and it's now gone from resistance into support. Big bounce up over here. You deviate, you back into the range low. This is on the low time frame, right? 4-hour range low. You come back into that. You now have a trade setup. Your stop goes below there and you're going long into the mid-range. If you can break through this level, this is a big key level, diagonal downtrend, mid-range as well, coming in around that 27,800 to 900 zone. Break above that and then you can target towards the range high coming in at $30,000. So this is talking to the low time frame traders. That is your potential trade setup. Watch for this. But with that being said, if this starts to act as resistance over here, the range low can't get deviated. So you can't deviate back inside, but instead you're flipping this into resistance and you start to see candles doing that. and then you have a bit of a bear flag, right? Bear flag, there's your pull. You start flagging like this, then you can say, well, you're probably going much lower, and then you can start to look to that 200 EMA and the 200 MA on the daily time frame as your next target. So I've given you a lot of information over here. At the end of the day, what you need to know is that price is quite extended from the mean. So there will at some point be a mean reversion play. Currently, we're about 7% away from the 200 EMA on the 4-hour chart. And of course, if you were to go down to those levels around that 12%, it's just a higher probability long trade for me in the short term, looking for the mean reversion back towards those EMAs. That happens most of the time. It's a pretty easy trade setup for me personally. So liquidation levels, well, the main liquidity is going to be now at 28,100, and based off that mean reversion play, whether it triggers now or triggers at $23,000, ultimately I am expecting a potential move up towards that $28,000 level. And you can see over here, funding rates has gone negative. Currently, there's about $15 billion worth of shorts, which would be liquidated. They're chasing price down at the moment. Okay. Let's look at this chart over here. This is the super low time frame. I guess this is in exact agreement with what I just showed you on the 4-hour chart. So no need to look at this. The only thing that I'll mention on this, I'm on the 15-minute time frame, is I will use this as my gauge to see if we're going to deviate back into the range or not. So if I see a break of structure back to the downside, what do I mean by that? Well, this chart's very slow for some reason. Let's see if that draws. Okay, just look at where my cursor is. Low, higher low, higher low, higher low, higher low. If that trend starts to shift and we start to reject again from the range lows, prior range lows, 25,856, and you start to make a lower low, breaking this structure over here, then I'm going to close that position that I took at $25,700. All right. Next, OKX. Let's finish off here with OKX. OKX wallet announced that it will be supporting account abstraction in the coming weeks. Account abstraction allows users to flexibly program more security and better user experiences into their accounts, and is also considered by Vitalik to be the future of wallets, which wonderful. Future of wallets, great. Account abstraction sounds very fancy. It just means you have better security, and you as a programmer, or you can find other programs that integrate into these wallets, you can protect your funds better, meaning that you still have the opportunity to use these centralized exchanges. If you are interested in OKX, they currently are running a massive promotion whereby instead of getting their usual $10,000 mystery box, you can now get up to $30,000 worth of rewards. Click the link in the description below. Everything is listed for you over there. You register, you get up to $10,000 in the mystery box. Then you make a deposit. You get up to another $10,000 in another mystery box. And then if you trade, you unlock potentially up to another $10,000, therefore unlocking $30,000 worth of potential. It's all in there. Click on that link. It will take you through. And that's it from me, folks. I will see you all on the next one. I apologize if there was any sound quality issues, but Josh reassured me that it's all fixed. Smash the like button. Josh doesn't get paid. And I'll see you all in tomorrow's show. Have a great day. Thanks for joining. Cheers for now.